What's going on, Eagle investors? This is Samuel here with a new segment, Trade Idea of the Week. Today, we will be looking at a long US Treasury yield / short US Treasury note position in TLT, which is the iShares Trust iShare 20 plus year Treasury bond ETF. Now, what this position is basically an expectation that yields will rise. Yields and treasuries are inversely correlated, meaning when yields rise, these treasury notes and bonds fall in price. Now, so if we have a put option for September 17th at the money basically, we're betting that TLT will fall and yields will rise. And the more yields rise, obviously, the larger the payoff is. If you can see on this payoff with a 3.9 credit or 3.9 debit, there's about $2,000 potential gain if TLT reaches the $135 level with only a max loss of $390. Now, why would we put on this trade? So there's an expectations of a reversal from recent yield moves. Yields were flying a few months ago, and a few weeks ago and days, they were pushed down from fear of inflation being more transitory from the FOMC meetings and a more hawkish or a softening on the hawkish view from the Fed. Now there's resistance at the mid 148 level on TLT with a clear path down to the 130s if in fact the yields do inverse. Now after an oversold move in these long maturity US Treasury yields from the transitory narrative increasing in popularity, the Fed's hawkish sentiment may continue with tapering expectations later in this year. The TLT put option structure is more optimal than futures with a stronger risk reward, as you could go into the Treasury futures or even the small exchange Treasury yield futures with a 1-to-1 payoff for every small BIP move, which is 1/100th of a percentage in yields. Or with the put option, you can allow for an asymmetrical risk reward payoff, as a larger move down will allow for an exponentially larger gain. So the first target we'd look at is around 150% gain, breaking the 140 level. And now if this breaks and yields look like they could continue to the 1.75% level that they were stuck at a few months ago, $135 is likely for TLT, which again would provide a large gain going from $400 debit to $2,000 gain. So it's about a 500% return. And now managing this option, so there could be some market chop, but that's why we have a September expiration. So that gives more time for this to play out, as some of the catalysts are, more month-long things, not overnight or weekly. And we have that mid 138 level to exit the option with minimal loss if in fact yields look like they haven't found a floor yet and they're going to continue going down to 7 months, 8 months, whatever it is, lows. Now, in summary, shorting treasuries at this critical point appears to have a strong risk reward, particularly if set up with an asymmetrical payoff, through the use of this put option on TLT. The TLT September 17th 146 put option looks favorable, provided TLT stays below that critical mid 148 level, and that would again indicate that it's found that floor and has a lot more upside in the coming months.